Wealthy families have been using a special kind of life insurance for decades as a powerful wealth building tool. It's called whole life insurance with cash value. And today we're going to break down how it works, why the wealthy love it, and how you can think about using it for yourself. But before we do, make sure to give a like to the video and subscribe to the channel for more financial content like this. And remember that none of this content is financial advice. All right, let's start with the basics. Whole life insurance is not the same as term insurance. With term, you're basically renting coverage. It's cheap, it lasts for a set number of years, and once that term ends, the coverage is gone. Whole life is permanent. It lasts your entire lifetime, and every premium you pay does two things. Part of it covers the insurance, and part of it goes into something called cash value. That cash value is like a savings account inside your policy. It grows every single year, guaranteed, and many policies also pay dividends on top of that. The best part? That growth happens tax deferred. You're not paying taxes on it as long as it stays inside the policy. Now here's where things get interesting. The wealthy don't just let that cash value sit there. They leverage it. Think of it like this. You put money into your policy. That money is compounding in the background, but at the same time, you can borrow against it whenever you need access to cash. And here's the kicker. Even when you borrow against your policy, your cash value continues to grow as if you never touched it. That's why some people call this strategy the rich man's Roth IRA. It's a way to keep your money working for you in the background, while still giving you liquidity to use it in the real world. So what do wealthy families actually do with this? They might borrow against their policy to invest in real estate. They might use it to fund a business opportunity, or they might use it as a private reserve of cash to handle emergencies without dipping into taxable accounts. Some even use it as a way to pass on generational wealth, because the death benefit transfers tax-free to their heirs. It's not about replacing investing in stocks or real estate. It's about having a safe, steady foundation of wealth that grows every year, no matter what the stock market is doing. Now, just to be clear, whole life insurance isn't for everyone. The premiums are higher than term insurance, and you really have to commit to funding it consistently for it to work. It's not a get-rich-quick scheme, it's a long-term wealth strategy that rewards patience and discipline. But that's exactly why the wealthy use it. They think long-term, and they love strategies that combine safety, growth, and flexibility. So now you know whole life insurance isn't just about protecting your family when you're gone. It's also about building and leveraging cash value while you're alive. That's why the wealthy use it, and why you might want to at least look into it. If you found this video helpful, give it a like, share it with someone who's interested in money strategies, and don't forget to subscribe for more content just like this. Thanks for watching, and I'll see you in the next one.